the west of the world versus China. So guys, you would have seen yesterday the markets were heavily anticipating Trump's announcement, okay? Trump's announcement or sort of statement regarding China. Now this obviously followed China obviously pressing forward with that security legislation in Hong Kong, which has angered the US, but not all, just the US, other parts of the West as well, the UK and the EU. So just firstly starting with the United States. So Trump did come out and look, let me stress something. It was not as bad as the markets were fearing. So yes, he said that they're going to begin, the US administration is starting processes with removing the special treatment that the United States has with Hong Kong. So bear in mind, as I said before in previous blogs, the US and Hong Kong go back in history since 1992. So now Trump's beginning to remove that special treatment on the back of obviously China's actions. Now, as I say, it's not as bad as it could have been. He could have come out and, you know, this is what the markets were fearing in terms of the worst, come out and started saying that, you know, this absolutely jeopardizes phase one. We're going to start looking to strike off this phase one deal that we signed in January regarding the trade side of things. But obviously if that would have been said, then we would have seen huge, like absolutely huge safe haven flows. But where he did not touch upon sort of phase one deal, I think that was a bit of a relief for the market. So you would have seen stocks were actually rallying towards the close there. We saw another bit of a little bit of a dollar pullback and the riskier FX currencies gaining some ground, okay? And that could continue to be seen next week, given these critical range breakouts that we saw versus the dollar in terms of its the dollar's peers, really making critical advances there. And look, just as I say with obviously the title of this blog being, you know, the west of the world, you know, the EU also has some problems with China, you know, with Chinese companies operating within the EU. And then obviously the UK, you know, similar to the United States, they're not happy with the way in which China sort of pressing forward with that legislation in Hong Kong. So they're also looking at their own sort of actions as well. And then China said back to the UK actually on Friday that the UK risks some countermeasures from China. So it's just, you know, this Cold War, as they say, that we're risking, you know, all this political hostility, which is not good for the markets, okay? For the time being, this is all being somewhat, not ignored, but it's being just disregarded right now, okay? So the riskier FX, and as I say, the riskier assets are gaining some ground. Gold is still somewhat holding decent ground at the moment, just as a hedge against all of this risk, okay? If this starts to escalate, then those safe haven flows will come back in the snap of the fingers, literally a heartbeat. So that's why we've got to stay on top of these fundamental developments and see how bad they escalate and the severity of obviously the rhetoric and, you know, actions from whether it's the EU and China, the UK and China, the US and China, so on and so forth. But I think the real hot one is, of course, US and China. So just wanted to bring you that update on that. Other than that, baby, look, ahead of the coming week, there's so many fundamentals going on right now, and it's actually a big coming week in terms of sort of economic events. So we've got the economic events, and then we've got all these themes. Do not hesitate to check out our membership, freaknetwork.io. We do fundamentals and technical analysis daily. So other than that, stay lit, baby. Let's get it.